Hello and happy new year to everybody out there. I am Daniel with On the Blog Vaughan, and it is my pleasure to welcome you to 2024. And we are going to walk through all that's been happening in the market in Vaughan up until the end of December 2023. We're going to take a look at all the market statistics and really take a deep dive into where we're at, where we've been, and a little bit of thought into where we're going in the market right now. So I'm going to start off here by looking at this is a snapshot you can see here of York Region as a whole, focusing on Vaughan, where it gives you an idea of what the activity was like in the month of December 2023. Now, we've been through a pretty um, I guess a pretty full of parity last year when it comes to things like interest rates, the economy, inflation, people's ability to purchase, rent, or sell their homes has been very different than what it has been. And we're also coming out of several years where, with COVID and all sorts of other factors, it has definitely not been typical by any stretch. And so every month has brought us new narratives and new information. And so December was no different. Thankfully, it was a month where interest rates have held steady and continued to at this point, which is hopefully bringing us to a place where there's some more certainty, some more flattening out with numbers, but there definitely was still some difference month over month. And these numbers here are overall numbers representing all of Vaughan for the month of December. You can see here the smaller numbers below show the change month over month that would have taken place. So when it comes to things like sales, that's the total number of sales that took place in real estate in Vaughan in December of 23, 161 sales, which was up from November by almost 18%. But new listings were down, which isn't too strange in a month like December. Historically, going into the holidays, people tend not to list as frequently new homes on the market. People don't like to put their homes up for sale when people are thinking holidays, people are thinking the break, coupled with the weather being a little bit colder. Historically, it's just not a big volume month. However, you can see that the number of new listings in December at 174, which was down, still outweighed the number of sales in the month of December, meaning net for the month, there were 13 more homes available on the market as active listings at the end of December than there were at the beginning. And that does contribute to a buyer's ability to have some more choice and ultimately will have an impact on prices and other factors as well with the economy when there's more available out there for people to look at. Now, the average price over the month did go down month over month to 1.27 million, which is still a large number, but down 6% from November. Now, when we're dealing with a pocket like Vaughan, even though that's very large and even though there's 161 transactions, one or two outliers on the high or low end, when you're talking about only a couple of hundred sales, can throw off that average substantially. So, a 6% drop in price is not indicative of the overall picture of either the GTA or even Vaughan as a whole in the trending that's been going on over the course of recent months and recent years as well. Leases, for those who are interested, were up considerably in the month of December, which is also something that you would see as a likely thing to take place going into a new year. Lots of people are starting to think about new leases starting January 1st. So it's not surprising that they were up. They were up substantially, 63%. So that's a huge jump. But again, seasonal wise, that's not something that's a surprise. Now, if we take a look a little bit deeper, I'm going to jump in here to the summary of the year. Now, this breaks down some of the information in a more specific sense. And this is all of Vaughan, all of these numbers here. You can see the top grid is speaking again to just December. So the monthly information based on the final month of 2023. And it makes it useful when you look at how that compares to the grid below year to date 2023. And this is the part that's going to show you everything that took place over the whole year. And why that's useful to look at them next to each other is it allows you to compare what the month of December looked like against what the average was for the whole year. So, which direction are we trending in different statistics? And now, if you can see here, there's lots of different information that we're going to be able to jump into a little bit more clearly and visually. But the important stuff, again, number of sales is this first column, and you can see as we mentioned before, 161 sales took place in the month of December. And now that's versus a grand total for the year of almost 3,100, meaning that on average, we're trending down considerably in number of sales. If you were to multiply 161 times 12, you'd fall well short of what the total sales were for the year, meaning that on average, we sold way more than 161 units per month over the course of the year. Now, that is still considering, as we mentioned here, that we were up 18% in volume for December versus November. So we're coming out of a pretty big drop that took place over the last few months, and we're still low, relatively speaking, to the rest of the month. But December was a bit of a rebound. The way that it broke down is not too surprising as far as Vaughan goes, that the bulk of the sales were in detached, with second place being condos at a pretty far margin from the detached. And then that drops to towns, semis, and condo towns just with six over the course of the month. And that breakdown is pretty similar when you look at how it breaks down over the year. Detached, the big winner, condo apartments being number two, followed by towns, semis, and condo towns, and then others after that as well. Now, the average price is the next important number that people are always considered or concerned with and want to take a look at. Um, for the month of December, the average price overall, once again, was 1.265 million. Now, that's compared to a year-to-date average price of almost 1.325. So almost $60,000 higher in terms of the average price for the year. And yes, prices have been coming down a bit since the early part of the year. Demand and sales were a little bit higher back then, and now we're starting to see a bit of a rebound with the volatility that's taken place with interest rates over the summer, which we will talk about a bit. But when that took place, people's ability to purchase got lower, which also made the ability that they had to offer higher prices was lower because it cost more money to borrow as interest rates went up. That's why, as the year has progressed and as interest rates have gotten higher, the average price of sales on homes has gotten lower. Now, that being said, again, this is starting to flatten out a bit because there hasn't been much volatility in the interest rates over the last couple months. And knock on wood, and as economists are predicting, it does not appear that there will be much more, if any, raising of interest rates. And in fact, the expectation is that interest rates will be going down in 2024. Now, as far as the actual segmented average price, in pretty much every segment, with the exception of condo towns, I believe, all of the different segments are lower in December versus what they were on average for the entire year. Now, condo towns, there's a couple reasons why the average would be a little bit higher in December. Number one, again, is because there were only six sales, so that could be very easily skewed by one larger condo townhouse that might have brought the average up. And the other reason is condo towns are one of the couple of segments that fall under $1 million. And when you're under $1 million, this does open up more opportunity for people making purchases and allowing smaller down payments, giving them some more flexibility in being able to purchase. So typically, as long as we stay under the $1 million number, there does tend to be a little bit more flexibility and less impact of higher prices on people than there would be when you're over $1 million. So it's not too surprising that there might have been the number going up a bit there, but largely that would be because one or two of the six sales probably skewed this up. Now, new listings and active listings were what we were talking about prior as well. And we can see here there were 174 new listings over the course of December, almost equally split between detached and condo, which is a little bit different than what the sales figures are. And some of that is because a lot of condos either are taking occupancy or tenants would be coming out of their leases in December, once again, which we talked about. And when more condos go on the market, that is indicative in some cases of landlords and investors divesting of their condos. And that would be something that would make more sense towards the end of the year, as their tenants might be moving out and they're not looking to bring in a new tenant, but rather sell the property and sell it as a vacant property as well. Um, Active listings are going to be the same number on both the monthly number and the year to date because that is a current figure. So that's a real time number. That's not an accumulation. That's what's available right now. So in Vaughan at the end of December, 534 listings were on the market, which is a healthy number. And when you look at that next to the number of sales that took place in the month, 161, that's a little bit more than a 3-to-1 ratio, meaning that um, there are still 3 times as many listings available than there were sold in the month. And if we were to continue the trend of slightly more or the same number of listings being added versus what's sold, that wouldn't change too dramatically the number of active listings on the market. Now, when you look at the year, there's a different story. Over the course of the year, 6,800 new listings came on the market versus only 3,000 or so sales. So there was not as much of a turnover of new listings that you would have seen. And given that there weren't 6,800 sales and there's not still 3,800 listings that are active, that means a lot of listings were taken off the market and not sold. That's where that difference would take place there, where lots was put on the market. In a lot of cases, sellers were hoping for higher numbers, higher demand. And because of things like the interest rates, there wasn't as much of an impact and wasn't as much of a demand or higher price that sellers were expecting. And because of that, where they could, they would have removed those listings from the market or relisted them later as another new listing that would have added to this new listing number, but not been multiple sales associated with multiple new listings. Now, the next column that's here is average sale price over listing price. Now, this speaks to an age-old question people have had about what people are asking when they list a property on the market and what people are actually expecting to pay. And historically, over the last several years, we've seen a lot of going over asking, meaning that a property is listed, say, for $1 million, but actually sells for 1.1 million. And this percentage represents what percentage of the listing price properties that sold actually sold for. And you can see over the course of the year, on average, almost every segment, with the exception by 1% of condo apartments, every segment was at or considerably above what the listing price was, meaning that properties were selling on average for more than what they were listed for on average over the course of the year. Again, only condo apartments came in at 99%, which is virtually the full asking price, where every other segment was 100% or more. Now, when you look at the month of December, although a minor difference, we are now below 100% in almost every segment. The only exception, once again, being those 6 sales for condo townhouse, again, supporting why the average price came up a bit. There was a sale there or multiple sales there that went over the listing price. But every other segment is below 100%, meaning the listing price right now actually represented the number at which the seller was willing to accept where sales were taking place, and buyers were not necessarily competing as much or offering and purchasing over the listing price on average as much as they had over the course of the rest of the year. The final statistic here is average days on market of a listing. And this is how long a listing would be listed before it gets sold or taken off the market. Historically, and over the course of the whole year, we were looking at pretty much under 20 days on average for listings. And that's in virtually every segment. The average grand total was 20 days average listing days on market. And that has been trending up over the course of the year, which I'll show you in the next slide. You can see that over the course of December, the average is up literally over 50% from what it has been for the year. That's a huge difference. Now, over a month is the average listing days on market versus 20 days for the rest of the year. At some points, this number was closer to 10 days on market. And that's in those times where, if you remember, when people are just jumping at listings and trying to get there and everything has an offer date a week away, that's what we were experiencing earlier in the year. But that's not the case as much right now. And that's supported by all these numbers, whether it's the sales price on average or the listing price as it relates to the selling price. It's all telling a similar story, that there's a little bit more comfort right now for individuals to take their time when looking at homes and determine what's best for them, as well as more selection that's out there as there's more active listings on the market and more listings coming out than sales. This isn't a bad thing for sellers, um, and nor is it a bad thing for buyers because we're getting more to a bit of a point where buyers and sellers can take their time to do their job properly. Sellers can ask for what they actually want for a home instead of having to play more pricing games and trying to get people to come up to a number they're hoping for. And buyers can take comfort that the place that just came on the market won't be flying off the market as quickly as it has in the past. Now, here is a visualization over the course of the last 3 years, month by month, of number of sales, and this gives you an idea of where things have been trending. And it's interesting because there are peaks in here in different points over the last several years. Now, this is the peak right here that took place in May of 2023. That was kind of the high point, and that was right before interest rate increases started coming again. So this is where um, the market had been ramping up since the new year of 2023, where sales were jumping 326 in March, 350 in April, 444 at the high point in May. And now, once again, we're down to 161 in December. And if I look here, this is the history of the interest rates that's taken place over the course of the last year and a half to give some perspective. And you can see here that the announcements in 2023 that were made that were impactful on June 7th and then subsequent to that on July 12th raised the interest rates to where we're at right now by an additional half point, which had a great impact on people. And people were prepared for that over the course of the spring, expecting it. And they took advantage before that went up. Things were trending in the right direction when interest rates were finally holding. You might remember back in 2022, this is when all those interest rate increases were going on every month. 1 point, three quarters of a point, half a point, quarter point. It was going up crazy. And then finally in January or in March, following the January announcement, interest rates held and they held for 2 straight months. And what that did was right away started getting people more comfortable with where we were at and purchasing. And then right away, when interest rates went back up, sales went back down. And you can see that that's because, in a large part, people had less they were able to spend or afford, or mortgages were more expensive for those people, which created a disconnect between buyers and what sellers were expecting. Because if you're a seller and your home is worth, or similar homes are getting $1 million in May, and then in June all somebody can afford is 900,000, it's unlikely, unless you need to sell, that you're going to unload your property at that point in time. And so sales have been a bit of a downward spiral, because again, there was one more or two more interest rate increases in June and July that brought us to where we're at right now. And so that high interest rate environment, coupled with people's non-urgency to sell, have kept things pretty low, and starting to trend in more of a flatline approach. Once again, there's a bit of a seasonality to December, because less people put things on the market then. But you can see things had been trending down quite heavily. And now here we sit in December, looking forward to hopefully an environment where interest rates will not be increasing anymore, and hopefully will start going down, where we will see rebounds like we saw here, and rebounds like we've seen in the middle of COVID situations and times where people started getting more comfortable coming off the sidelines and transacting in real estate. Now, new listings, this might take a second to load. New listings in Vaughan are also, now this is showing December doesn't factor here, so I'm just going to take December out so that you can actually see the trend. Okay. Because the December numbers aren't in there and there weren't zero. So there's your new listings as of November. Um, they are trending a little bit down, but we're still in a position where, again, we're higher than the number of sales that are out there. And seasonal wise, there's still actually a higher comparative to past November's. If you look at November 2022, there were 199 new listings. If you look at November 21, 248, November 2020, 281. Historically, this is the low point, is November, December, and then things start rebounding. So if we follow the trend that we've seen seasonal wise, and you couple that with the smaller number of sales that have taken place over the course of the last few months, it's very likely that barring an additional interest rate hike, which isn't expected, that this number will start to go up quite a bit more and probably hit new levels that we haven't seen in a few years. If you look at year over year comparisons here, I'm just going to add that on top of the chart. You can see that year over year, new listings are up considerably over the last several months. There's a lot more people putting their units on the market as compared to the number of new listings that were going on the market at the beginning of the year. And honestly, for much of the last 3 years, there hasn't been any positive trending in supply or in new listings out there since May of 2021. So we're talking right now almost 2.5 years, more than 2.5 years that it's been since there's been any upswing in new listings. And that is one of the biggest impacts on affordability, on availability to buyers, and to prices that are out there. So seeing more supply that's coming onto the market by way of new listings is comforting, and that's been the trend now since the late summer of this past year, and that's expected to increase quite a bit. Now, if we look at active listings, which I'll switch to here, you can see, and I'll leave the year over year comparison here as well. You can see a similar story recently here, well, where there is considerably more on the market as compared to a year ago, and definitely as compared to what we were dealing with at the beginning part of this year. There were upswings that were similar over the course of all of 2022. And the reason for that is that's when the big jumps in interest rates were taking place. And when those interest rate jumps were happening, there was a lot more sitting on the market because people did not know what to do. Buyers were not engaging, and more people were putting their places on the market and they were sitting there for a good part of 2022. And that's why you see such a big jump in active listings that were on the market as compared to the year prior, where there was a lot of activity and people were buying things up quite a bit more in 2021. All right. Average sales price we'll look at here because that's a number that people look at, and I think there's a concern now when we say that prices are a little bit lower. When we look at it on the overall, which is this orange line here, there was definitely a super high point that took place in the middle in the beginning of 2022. That was prior to a lot of these interest rate jumps, and it's not surprising that that high point took place before things got a lot more expensive to borrow for people who are out there purchasing. But when you look at where we're at right now, we did take quite a dip, and that is consistent with all these interest rate jumps. There was a little bit of a jump that took place at the beginning of 2023 again, which was because finally the interest rate jump stopped. People started getting more comfortable. People still need to purchase homes, so prices were up there a little bit more. But now, following these last two interest rate jumps that have taken place and the cost of things, we're finally back on an upswing now in November 2023. And when you look at it as compared, we're really, after a roller coaster, starting to get back on a bit more of a straight line that's consistent to where we were trending at the beginning of and going into COVID, when this roller coaster began of going up, going down, and all over the place. The hope is that now we're on more of a normal inflationary approach. As interest rates stay similar and start to come down, this number will start trending up and average prices will be going up, but it'll be going up at a more manageable rate. And hopefully, we don't see these huge peaks and valleys that make it really difficult for buyers and sellers to determine what's going on. So there's a lot going on right now. However, the good news is we've reached a point where we're starting to flatten out. We're going into a new year with almost an ability to reset things the way a new year should into a situation where things can be a little bit more predicted, barring any unforeseen things that happen. And obviously, the last few years have seen all sorts of unforeseen things happen. We're in a place right now where we can reasonably expect that there will be supply that's on the market. It will slowly and gradually increase to allow people who are looking to purchase homes to have some choice, but the prices will also start to rebound as well, seeing that follow a little bit more of a predictable pattern that allows sellers to make good decisions, be comfortable selling their properties as well. As you can see here, there is a ton of information that's available to us to break down any sorts of statistics and start to put more information out there to give you more insight for the decisions that you might be making in purchasing or selling a property. So if there is any information that you need, would like to have, if you'd like to have a chat, or if you know anybody who's interested in buying, selling, or getting more information about the real estate market, we are always here to have a chat, to share some more insight with you. That's what we're here for. And so reach out to us through social media. You can reach out to us by email, and we're happy to chat with you. And again, it's been our pleasure sharing this with you every month. We'll be back again at the end of January with some more information, but that's your year end report for 2023. I'm Daniel with On the Block Vaughan, and I thank you once again for your time. Take care. Happy New Year.